Well, viewers, Donald Trump's reciprocal tariffs have sent the stock markets across the world into a tizzy. After a massive Wall Street meltdown on Friday, the Asian markets nosedive. The situation in India is no different. Well, investors in India are witnessing a sea of red. Well, there has been bloodbath on the Lal Street as well. Sensex opened with a cut of almost 400 points. Nifty 50 has shed close to 1,000 points in the morning as well. And even now, as we speak, markets are not looking too good. Wondering what's the reason behind it all? In fact, ask who is the reason? Well, none other than US President Donald Trump and his reciprocal tariffs. Of course, that has been the biggest problem that we have been facing after reciprocal tariffs were announced by Donald Trump against several of the nations, leading to the steep fall in Indian markets as well. So what really are the reasons behind it all? We are going to get you the details, but first up, listening to what Donald Trump has to say.
I don't want anything to go down, but sometimes you have to take medicine to fix something. I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that, because to me a deficit is a loss. We're going to have surpluses, or we're at worst going to be breaking even. We will be taking in over $1 trillion over the next short period of time with the tariffs that I've already instituted. They're already in place now.
So what really have been the reasons for it? Remember, his reciprocal tariffs are across on 60 countries. China, of course, has retaliated with 34% retaliatory tariffs as well, which are going to be kicking in. But what really are the reasons? Let's get you those for the worst opening since March 2020 for India. The first reason is China's 34 retaliation, as we were discussing. Of course, recession fears now have hit United States as well, and this has led to a lot of uneasiness about the actions of Trump, which has led to a trade war fear escalating. Hence, now markets are worried about the future as well. India, of course, has been following its Asian peers. Listen in to what Trump had said on the stock market crash, as you just heard. But let me go across to Narendra Taneja, who's joining us, an economist. Narendra Taneja, as we have been discussing, there is absolute mayhem this Monday morning. What is your advice for the investors?
Well, good question. My advice is for the moment to stay calm. I mean, as India, as you know, is looking at the whole thing, and at the same time, we are not in a great hurry to respond, whether in terms of an indirect statement or a retaliatory tariff, because our fundamentals of Indian economy are pretty strong. But at the same time, we all know markets are globally integrated, and so therefore markets in Mumbai, they are also, reacting accordingly. The markets world over are not convinced with one argument of President Trump. He says he's doing all this in order to bring manufacturing back to the United States. Markets are unable to understand how can you bring manufacturing back to the United States overnight. The whole process can take anything between 3 years to 10 years, depending on the kind of sector and the industry. So markets think it's more politics than anything, that he's trying to basically appeal to his domestic voters, and that's why, he's doing that. So important thing is President Trump, that they convince the market as well. They convince the world public opinion on this. But right now, markets are very clear. They are not convinced. And therefore, the individual countries are going with their own steps in terms of retaliatory tariffs and so on and so forth. And markets think the world now is heading in the direction of global economic recession. Even institutions like IMF have indicated that. So the world is preparing for that.
Is that a real threat, Narendra Taneja, a global economic recession?
Good question. I think it's too early to really say that, because individually, when you look at the countries and the economic zones, they are doing pretty fine, including the United States and Europe and India, to some extent even China, to some extent even Russia. So I think it's a bit premature, but it's being used as a kind of argument. And, markets respond to emotions. They don't react, or they don't really go as per the facts, the cold facts, or the logic and all that. Markets are all about emotions. So this reaction is based on emotions, but the United States has to do something about it, because only they can fix the emotions. If they continue to do what they are doing, market response will continue to be more emotional than logical, and in the process, billions of dollars will disappear from the market, and there would be fear that we are heading in the direction of global recession. Scientifically speaking, are we heading for the global economic recession? No. Is it premature? Absolutely. Is it certain markets, global economy is going to kind of get into a recession? At this stage, no, we can't say that.
Well, it's good to have that assurance. Do stay on with us, Narendra Taneja. I believe my colleague Hina Gambhir also has some questions for you. Hina?
Well, I think, Meghna, Mr. Taneja made some interesting points like you asked him. Mr. Taneja, good afternoon. Wanted to ask you, you're saying the current fears of recession are premature and there is not much to worry about. We all understand that markets react to emotions in anticipation of an event. We do see these kind of reactions. But then, you've got Goldman Sachs saying that the chances of US recession in 12 months, in fact, have now risen to 45% from 35% earlier. You've got JP Morgan saying there are 60% chances of a US and global recession. We still have not heard from the Indian side about, how we are going to respond to these Trump reciprocal tariffs. So do you think the government should come out to give assurance to the investors here? Because people are losing money. I mean, even though markets are reacting on emotions, but people are losing money. Investors are losing their wealth on a daily basis. That is a reality.
Well, good questions and good arguments, but there are different ways to look at it. For instance, whatever is happening, nothing to do with the policy announcements coming or initiatives on the part of the government of India. That is not the case. In markets are only reacting, only the stock markets, not the economy. Stock markets are reacting to what America is doing, number one. Number two, look at the commodities. For instance, price of oil. Price of crude oil, which is very critical factor in India's economy for India in terms of our whole economic health and practically everything, because ours is an oil economy. Prices have crashed. They're coming close to $60 per barrel. Is it a good news? In short term, if I take a short view, it is very good news because cheap oil is always good for our economy. But that said, at the same time, if we get cheap oil, but the global economy slips into recession, that's bad. But at the moment, there is no sign the global economy is slipping into recession. It's premature. At the same time, what we know is that oil prices have come down. So we might have, some benefit of it, let's say, in the coming few weeks. But as I said, oil prices are $70 per barrel, global economy in a good shape. That's what we want.
Right.
But at the moment, I think we should not react. We should wait and watch.
So it's important not to take any hasty steps right now, is what Narendra Taneja is advising our viewers. In fact, let me go across to Yamini Agarwal also, who's joining us, an economist. Yamini Agarwal, many are talking about financial reforms that India perhaps should look at right now when it comes to insulating its domestic markets from what's happening in the global markets and the cues that we have been following here. What needs to be done here onwards?
Well, I think India has been introducing financial reforms from a very long time, and in a slow and a gradual manner, they have been introduced, which is a more, let's say, appropriate way rather than just initiating something like an internal panel to review all regulations or a high-powered committee for all regulations across that was specified in the budget. Regulations need to be introduced in a slow and a gradual manner so that they can be absorbed by the market and do not receive a reaction which may be adverse for an economy. So economic shocks in the form of regulations may not be right, but yes, different regulations which do ease businesses and help them reach out to the necessary credit, as both household debts and corporate debts are high in the market, as well as the bank balance sheets have, do not have sufficient deposits. And the RBI has also moved to a neutral stance, withdrawing an accommodative stance. So all these factors, while taken into consideration, must ensure that regulations are people-friendly in the way that they don't make a sudden jerk in situations for people, making it difficult for people to adjust to it.
Mm-hmm. So essentially, wait and watch. Don't take any hasty steps, especially if you're an investor. I'm also being joined by Ajay Banga, a market expert. I'll just come to you in a moment, sir. But Hina, one of the things that Donald Trump had said earlier is that this is going to be a medicine is required to fix something. Is it likely to fix something? Because right now, it doesn't look so, especially when it comes to American markets.
Well, you will agree, Meghna, if medicines are taken without proper diagnosis of a problem, they can have side effects as well. That's what the experts today are talking about, even though it seems Donald Trump is not really taking this bloodbath across, on markets across the world very seriously, but it is a reality. There are at least two big investment banks which have, in fact, spoken about the possibility of recession in the US market. There are some top economists across the world who have called Donald Trump's tariffs on 60-odd countries as a self-goal by the United States of America. Even though he wants to make America the manufacturing hub of the world, a manufacturing superpower, but many feel that these actions are not really going to help US significantly because US needs, the help of other countries as well. We live in an interconnected world. We cannot have a situation wherein one country is imposing tariffs. And remember, 10% is the base tariff that has been imposed even on countries that do not levy any tariff on the United States of America. So it's an interconnected world. If something happens in the US, the repercussions will be felt across the world. If something happens with China, if China does something, the impact will definitely be felt in America too. And that is exactly what we are seeing right now. On one hand, after US president imposed tariffs, we had China retaliating with 34% tariffs. And then the fear is this action is going to restrict the market access of China to the US, which perhaps could lead to dumping from China to Asian countries. That could have an impact on the Asian markets, and that's why you are seeing deep cuts in stock markets across Asia as well, be it Japan, Korea or other Asian peers. All of them are seeing at least a 4 to 7% cut right now. Wall Street on Friday saw a meltdown as well, the worst meltdown that was last witnessed in March 2020. Since then, this was the biggest meltdown that we saw on the Wall Street in the US on Friday. Repercussions being felt here. Now, Meghna, all our eyes are going to be on the response of the Indian market. Even though we appear to be very, very resilient because we have an increasing share of retail investors, domestic investors, but government's response is going to be extremely critical from here on.
Absolutely. India will be facing the heat of this very bitter pill, Hina, isn't it, from Donald Trump. It's, of course, targeted towards 60 different nations. So, Ajay Bagga, here's the problem. It may not be due to domestic reasons. However, Indian markets have, of course, are part of the larger chain as well and has reacted accordingly. What should investors do? And that is one question that all you analysts as well as market experts must give your advice on, because that's the fear right now. Is there another recession hitting?
Yeah, it's not 2000, not a pandemic or a shutdown. Our domestic economy goes on as it is. Our structural growth story is very much intact. But given that, we might be resilient, but we are not insulated. So at a certain pain point, those tremors come into our markets as well. This time around, they have come early. Last week, we were quite complacent going into 2nd April. We were not seeing a trouble in our markets. But this time around, today, as Asia fell about 7% and the global markets are tanking, we have seen some amount of cuts coming into India. So resilient but not insulated. What the Indian investor has to do, focus back on the structural India story. These are cyclical downturns which will come from time to time. We expect the RBI to cut rates day after tomorrow, 9th of April. We are expecting an RBI rate cut. We are expecting a stimulus announcement in China. China has already spoken about supporting its manufacturers. All that will flow through India as well.
But fiscal, monetary and reform packages, would that be required, Mr. Ajay Bagga, to pull the economy out of this?
Yeah, we do require. We require fiscal stimulus. We require a monetary policy easing, which RBI is already doing. And we need a reform stimulus, less cost of compliance, ease the burden of the entrepreneur. I don't think any of that will happen except the monetary part. So I didn't mention it. Right now, we are at peak uncertainty. That is where we are at. We are probably reaching a level where there could be capitulation in the global markets. where you could see even further sell-offs. We'll not be immune, so we will see sell-offs in India. I would say postpone any new investment for now, except the usual SIPs that you're putting, and hold on to your portfolios for the long term. This is not the time to sell off.
Okay, so that's good advice coming in. Most of the economists have said it's important to wait and watch, hold on to your portfolios, except for the SIPs. Do not panic right now. Ashesha is also joining us. Ashesha, of course, what happened today early morning had sent everyone into a tizzy. Any steps, any kind of assurances coming in from the government, the way forward?
Well, yes, we don't have any commentary so far from the Indian government, but as far as Indian markets are concerned, they have recovered. They tried to recover from the lowest point of the day, but despite that, Indian equity markets continue to reel under pressure today. Nifty is down nearly 1,000 points, Nifty Bank is down nearly 2,200 points, and Sensex is down a whopping 3,000 points. It has recovered slightly from the lowest point of the day, and all sectoral indices continue to bleed and trade today. A whole host of stocks continue to be at 52-week low at all-time low levels, and as Mr. Baga was mentioning, there continues to be uncertainty in the global market with respect to tariff war and what commentary and what further steps US President Donald Trump could take. Remember, it's not just equity markets which is facing the brunt of global tariff war, it's across the board for other asset classes as well. So for instance, gold, which is usually considered as a safe haven asset, is also under pressure. It is now trading near that $3,030 per ounce mark. In fact, silver is off nearly 15% from its recent high. And not just gold and silver, Brent crude. This, of course, is a positive for India because India imports most of its crude oil requirement. But Brent crude is now trading near that $64 per barrel mark. So it's not just equity markets across the board. For all other asset classes also, we are bearing the brunt. For now, we don't have any commentary that has come in. But experts believe this could turn out to be an opportunity for India because remember, rates for India are much lower than other Asian countries, the likes of China, Korea, and perhaps India could start trading with the US, and this could turn out to be an opportunity for India. But for now, equity markets are bleeding, much in line with other global markets.
Well, that's an interesting point that you have raised. In fact, let me take that across to Yamini Agarwal, who's still there with us, an economist. There are many who are saying that there may be an opportunity out of this crisis and the massive tariffs that Trump has levied on nations such as China. Is there an opportunity here in India? But in the short term, will any of that help?
I did understand that there was some official statement that the lowest tariff has been, put on India, and as a result, competitively, it still remains, at a better place than the others. Also,
absolutely.
at the same
China's
time,
is 34%, India still is at 27%. So that's the advantage, Yamini Agarwal, that some of the people have been citing.
Bilateral treaties with the US for the same, and also placing their products with respect to China at a better stage. So while the tariffs are there and the crisis seems to be there, there are opportunities which the Indian government or the official statements do identify across the newspaper that there are opportunities that India is looking forward for.
Absolutely. In fact, thank you so much, Yamini Agarwal, for joining us. Let me go across to Hina Gambhir as well. Hina, it's interesting, despite the fact that global markets have gone into a meltdown this Monday morning, you have the Trump team taking victory laps. They've seen this as the medicine. So one would imagine no reason for them, or no chances rather for them, to blink at this stage, as many were hoping that he may see the bloodbath and do a rethink. Doesn't look likely now.
Well, absolutely. Given the kind of reaction we have got from Donald Trump and the kind of ambitions that he has for the United States of America in his second term as the US president, it seems his focus is only one thing: making America great again. But the question really is that, is it the right step? Is it the right thing to do, what he is doing? He may have good intentions for the people of America, but, you know, like many call him a disruptor because of the kind of policies that he comes up with. Will this actually help America? That remains a big question, and the repercussions it may have for the entire world. That's something that's being reflected, you know, in how the markets are reacting today. There was a complete bloodbath on Friday. There was a meltdown on the Wall Street on Friday, and then in the Asian markets today we saw that continuing, the ripple effect, and now on for India as well, on the Dalal Street we are seeing the tremors being felt as well. Even though we are more resilient, we do not export that much to the United States of America, so tariff wise it might not really impact us way too much, but globally if the growth falls down, the demand falls down, then for us we need to worry. Our inflation may go up, our growth may get impacted. Right now we are the fastest growing economy in the world in terms of the percentage. We have got a demographic dividend as well, and that's the reason why we are making policies to make use of this demographic dividend that they have. But if the external pressures continue like this, then all our plans may also get impacted. Amidst all of this, a statement from India becomes extremely critical. I also want to talk to you a little bit about what the top economists are saying. Former RBI Governor Raghuram Rajan, who is a big face as far as the world of economy is concerned, he is among the few who has in fact called this a self-goal by the United States of America. According to him, this will hit America hard. It may have some kind of impact on a country like India, but it won't be too much. But for America, the impact is going to be hard. Is it something that markets today are seeing that perhaps Donald Trump is not looking at? So, that clearly remains to be seen. And Donald Trump still remains, firm on his stand that he wants to negotiate with countries. Many countries are ready to negotiate with him. So we'll have to wait and see what India does with the United States of America. So far, the pharma sector has been kept out of this entire tariff regime. The reciprocal tariffs that have been imposed, by Donald Trump on India specifically, the 26% tariff that it has announced for India. Pharma sector is out of it, a big sector. But in the long term, or perhaps in the short term, are we likely to see tariffs on pharma as well? That remains to be seen. And, this uncertainty, this nervousness, this is what markets do not really like. Because when you don't know what is at the end of the tunnel, you don't know whether to go ahead or stay there or, take a U-turn. That's exactly what we are seeing right now. But an important advice coming in from market experts, Meghna, do not panic right now. Stay invested, but avoid planning some new investment. So I think that's what our viewers can take away from the conversation so far.
Well, that's a very important point that you've highlighted. Yes, our analysts who've joined us here on Times Now have said no reason to hit the panic button. Hold on to your portfolios. Don't make new investments, but hold on to your SIPs. There is no reason to panic right now. However, these are some of the reasons, perhaps, why there is a lot of uneasiness. On your screens, you can see how Goldman Sachs has predicted a 45% chance of U.S. recession in 12 months. U.S. recession, as even Hina was pointing out, there are the likes of Raghuram Rajan who are saying that this may just be a self-goal by the Trump Sarkar. In fact, you also have JP Morgan who are saying that there's a 60% chance of a U.S. and global recession, which is why perhaps the markets are jittery. But then all investors have said, don't worry. The Indian markets may not be insulated, but they are resilient. Thank you so much, Hina, as well as all the market experts who have joined us, as well as Ashesha. With that, a short break. This continues to be our top focus story. Stay tuned.